Hey, good morning, everybody. Welcome to another day on the Market Report brought to you by Mike Bjork. Today is Thursday, July 17th, and we do got a few economic news releases to go over today. We'll start off with the weekly jobless claims. So last week we had 305,000 people applying for unemployment. Forecast for this week was 310,000, and it actually dropped to 302. So good numbers over there. We're getting in the low threes of late, where before we were kind of averaging between 310, 320. So it seems like we dropped a little bit, which is good news. We got the housing starts for the month of June. So back in May, we had 985,000 new houses started, and for the month of June, the forecast was 1.02 million, and it came in very disappointing at 893. So huge disappointment. Actually, you're talking 100,000, almost 100,000 fewer homes, and then even well off from the forecast. But on the other hand, we got the Philly Fed for the month of July, and we had a 17 to 8 back in June, and the forecast was supposed to taper down to 16.5, and it jumped up to 23.9. So this is kind of like the Empire State Index we had earlier in the week, where it was kind of like the teens and jumped up quite a bit, about 4 points. Great news there. So very mixed bag here. Jobless claims were good, housing starts not so good, and the Philly Fed were good. So let's go ahead and take what the headline news. And the stock market's down. It's taken more of its cue based on some of the earnings reports that were taken out, especially today with the big news of Microsoft announcing they're going to be cutting 18,000 jobs out there and probably going to be spending about 1.6 billion in terms of restructuring and taking as they go through this over this next year. Also, we kind of woke up this morning to issues in Russia, Ukraine. So it kind of has the geopolitical aspect today too, with the Russian plane shooting down a Ukrainian fighter plane. So, and then also the U.S. is talking about additional sanctions are going to be applying towards Russia, and of course, Russia stocks are down because there's talk about Putin coming up with some retaliation or revenge against these sanctions. So this could come out to be a kind of economic war here. Hopefully that's the worst case scenario, economic war versus the alternative. But anyways, these are some of the things that are coming about. And later today we have a Fed member who's not he's a Fed member out of the St. Louis region, but he's not a voting member. But he's slated to speak today. He was kind of last week he had comments about the inflation as well as unemployment, where unemployment in the labor market is getting to a point where it's improving enough that it could push inflation over the 2% level in 2015. So it will be interesting to see what he says today in those regards, as those have been the hot topics as the Fed reduces its quantitative easing purchases and should be completed with those purchases by October. All right, so let's go ahead and take a look here at the bond market to see what's going on here. So we're just getting a little bit of an improvement again in the bond market as money is being pulled from the stock. It's going back into the bond. And what does that mean? It means that interest rates are showing a slight improvement right now. We're not at the same levels we were earlier in the month, but we do have we are showing a little bit of improvement, and we'll see if it kind of continues. After a pretty good June stock market, there's talk that maybe it could pull back a little bit, and there's the feeling in the investors that they're looking for any reason to pull back at this time. So that could bode well more for interest rates for July. So if that happens, money comes out of the stock market, will go into the bond market, which will help us increase the demand, which will reduce the interest rates. So we'll see if that plays out this month. All right, folks, but slight improvement today with interest rates. Thanks for watching. We'll see you guys tomorrow, and we'll look forward to seeing you. Thanks again for watching. Take care.